Are you a home buyer in California or potentially a home seller and you're trying to make sense of this current market? I've been a real estate broker here in Southern California for 20 years, and I have literally never seen a market like this before. You've probably seen the headlines. You hear people talking about it on social media. Everyone is kind of like with their arms up in the air, not knowing how to make sense of what's happening in this current environment. I've been a real estate expert for as long as I have, and I don't even know in certain environments what to tell my clients to offer on a property because it doesn't make sense anymore. I'll give you a couple of examples to shed some light on what we're seeing right now, at least in Southern California. However, I do have a lot of friends that are agents across the country, and this is a national issue. We have a national shortage of inventory of homes for sale. And all the agents that I'm talking to in the different markets, even though pricing might be a little bit different, because here in California, we typically have higher prices, but every agent that I talk to is experiencing the same phenomenon, which is multiple offers, an extreme shortage of inventory. There's barely any homes available for sale, and we could have 10, 15, 20 offers on one property. And that means only one buyer is getting that home, and 10 or 15 others are walking away without an opportunity to move into that property. So a little bit of backstory. We've been really fighting tooth and nail over the last couple of months to try to get our clients into properties. And we've been seeing now, probably more than ever before, the amount that we're seeing prices go above the list price is actually truly astonishing. I'll give you a couple examples. In the last couple of weeks, my team has written offers on 4 different listings, and typically they're in the $1.8 to $2 million range. These are homes where the most recent comps in the neighborhood might be $1.6 million to $1.7 million. So the seller is already coming out of the gate $100,000 to $200,000 over the most recent sale in the neighborhood. In the particular cases that we've experienced lately, 1.8 list price, we come in with a very strong offer. We remove loan contingency. We remove appraisal contingency, come in $200,000 over list price. You'd think that would be enough. It's not in this market. We're seeing homes in that price range go $300,000 to $400,000 over list price. So if you look at it compared to the last comp, that $300,000 or $400,000 could turn into $400,000 to $500,000 over a comp from maybe November or December, maybe just 2 or 3 months ago. So when you look at that from a percentage basis, we're seeing homes go 20% over the most recent sale in the neighborhood. Now that is not healthy in any stroke of the imagination. Sellers who are selling their home and cashing out right now, it's obviously good for them, but it's not healthy to see this much appreciation in such a short period of time. It's actually pretty crazy. We've seen this once before. We saw it back in 2004, 2005, and then we had the height of the market in 2006 before the big crash and then the Great Recession. Now, am I predicting another big real estate crash here? I'm not. I am just kind of giving you from the trenches what I'm experiencing, and I'll give you kind of my opinion and forecast of what potentially could be happening down the road. So I get calls from clients all the time. I spoke to a client today who is potentially thinking about selling his home. And I ran through a couple of different scenarios with him, and I thought it would be good to share in a video how that conversation went and how it might apply to you and to your family if you're thinking about doing something with your real estate needs. I'm Gabe Cole. I'm a local real estate broker here in Orange County, California, and I've been practicing real estate here for 20 years. And hopefully this video and the information in it will shed a little bit of light, maybe raise some questions for you to be thinking of for you and your family when you're thinking about buying or selling or jumping into the real estate market, whether it be in California or anywhere across the country. So going back to this client today that I was speaking with, we had a conversation about potentially selling his property and not really knowing where he was going to go next. I think that's going to be a very common theme that we're seeing with home sellers in today's market. A lot of home sellers would put their home on the market if they knew where they were going next. But because there's such little inventory on the market, A lot of these home sellers are paralyzed and not wanting to put their homes up for sale because they're worried they'll have nowhere to go. They'll have to either find a rental or move into an apartment, because if they sell, even if they sell for a really high price, they're going to have to buy at a high price as well. So I think what we're seeing here is really kind of a catch-22, and that seller won't put their home on the market because of their fear of being homeless, right? So this particular client that I was speaking with this morning, he doesn't know where they're going to go next. He thought that maybe when their youngest kid goes off to college, then they would potentially be looking to move out of state. So is now a good time to sell your property if you don't know necessarily where you're going yet? Well, we got into a discussion of timing the market. And it's really, really difficult to time the real estate market. You think you could be selling at the top, and then we could have another year of appreciation, and then you feel like you sold too early. Conversely, you could sell now, and we could see some reversal in pricing, and you may not be able to get the type of pricing you could get today 6 to 12 months from now. So specifically in the Orange County or Southern California market, I think a couple of different scenarios can play out. One, because we have such limited supply of inventory, I believe we're going to see another, at a minimum, 6 to 12 months of appreciation this year. Now, that being said, I don't believe it's possible to continue seeing the level of appreciation that we've been seeing the last 6 months. Like I mentioned, we're seeing properties go 20, sometimes 25% over the last comp that was 2 to 3 months ago. That has to slow down. So I think eventually buyers are just going to back off and say, enough is enough. Prices have gotten crazy. They've gone up way too much in such a short period of time. And that may force sellers to actually lower their prices in order to meet the buyer demand. So that's option one. Option two is we also see interest rates climbing. If you look at last year, we hit a low of interest rates at about 2.65%. So far this year, they've gone up by about 0.5% just from January to February, and now we're hovering at about 3.5 to 3.6%. So we're at about 1% higher in interest rates than we were a year ago. Now, you would think that that would soften demand, but because there's such limited supply of inventory on the market, you've got such few homes for sale and you have a lot of buyers that want to buy those homes, that 1% increase in interest rates has not been enough to hamper demand and soften the amount of offers that we're seeing on properties. So let's say interest rates go to 4%. Let's say they go to 4.5% or 5%. Everyone's talking about inflation and how that's on the rise. Typically in an inflationary market, we see interest rates rise. And the Fed has already discussed that they plan to raise interest rates 3 times over the course of the year. That in turn affects the 10-year Treasury note, which in turn would affect mortgage rates. So if we see interest rates go back up to 4.5% or 5%, I do believe that that will have an impact on the market and slow the velocity of the market down, because prices have gone up so much. Buyers are going to be looking at their payment. And because right now their payment is still affordable, even though prices have been escalating, once rates go up another point or point and a half, they're going to be making a much stronger and closer look at what that means to their housing payment and affordability. And I think it's going to start pricing a lot of buyers out of the market. And when that happens, sellers are going to have to come down off their prices in order to meet buyer expectations. So I think that's maybe one of the other options that's going to happen in the marketplace is we see rates go up, buyer demand come down because of affordability, and because of that, prices soften. Now, am I talking about a full reversal and, we're at the cliff and now we're going to see prices just drop off the cliff? I'm not saying that, because if you compare today back to 2006, all the buyers that have been buying homes today have had to have the income levels to qualify for those homes. So what that means is they're also coming in with down payments. Unlike 2006, where if you could fog a mirror and put in, basically 0% down, you'd get 100% financing loan. And back then they had what was called negative amortization loans, where you had a minimum payment that was not even paying off the interest rate on the loan. So today's fundamentals way different than what they were back then. So no, I don't see a pending market crash. However, if you are a seller and you have plans to go somewhere else, let's say you want to move out of state. This is what I was explaining to my client. He has potentially had the interest in moving out of state, but he may not be ready for 1 to 2 years. So we had talked about 2 different options that I laid out on the table for him. One was sell his investment property and do a 1031 exchange. What that is it's a way for you to defer your taxes on the gain of your investment property. And he has a couple of different areas that he has of interest that he would eventually like to move to. What I mentioned to him was you could do a 1031 exchange on your current investment property, buy something out of state, and turn that into a rental property until you're ready to move to that area. That way, he defers his taxes. If for some reason he needs to utilize any of the equity from that property, he can always do a cash out refinance on the properties he's purchasing, which is not a taxable event. So when he wants to move, let's say it's Tennessee, because that's one of the areas he was considering. If he wants to move to Tennessee, he can then move out there, and he already has a property that he had previously purchased and turned into a rental. The other option was selling his current house that he's currently living in and moving into his rental property right now, also prior to moving out of state. So as a seller, it's very difficult to time the market. However, I believe that based off of the craziness we're seeing, we may not be at the very peak right now, but I do believe we're very close to it. Based on interest rates on the rise, buyers currently paying what we would consider crazy prices in bidding wars. When buyers typically get extremely emotional about buying or getting into a property, and we see them paying irrational prices, that's typically a sign that we may be towards the top of the market. Now, if you are a buyer right now and the next home you want to move into is going to be a home that you can be in for the next 10, 15, 20 years, it doesn't matter if pricing corrects or comes down, because if you're able to lock in your current mortgage right now, that's what you're locking in. You're locking in your payment, especially if you get a 30-year mortgage. If rates go up and prices go down and you continue living in the property, it really doesn't matter if you paid 5 or 10% over what the market value is in the future, because you've locked in your payment and you know you're there for the long haul. Now, if you're thinking you're going to buy a property and only be in it for 1 or 2 years, then you may want to think twice right now if it's the right time for you to buy. Because in order to compete in today's market, you need to really up your offers above everyone else. And you may end up feeling like you overpaid in the event you have to sell in 1 or 2 years. Now, can the market still continue to go up over the next year? Yes, it can. But I believe if you're a buyer and you've got a long-term outlook, it really doesn't matter if the price comes down. Now, if you're a seller and you're thinking about wanting to move up to another property that's larger size, then it may still also make sense for you to make that move now, because again, you'd be able to lock in your current interest rate. And if you know that next house is going to be a long-term home for you and gives you the things that you want, maybe it's the extra bedroom, maybe you really want a pool, a bonus room for the kids, whatever it is that's not fitting your needs in your current house, and that next house is going to solve that problem for you, then it still could be a good opportunity for you to move up. So those are a couple of my thoughts on the market. We're seeing this throughout the country. So extreme lack of supply, high demand. It's going to be a very interesting year for us. If you have any questions on the market, feel free to reach out. Even if you're thinking about relocating out of state, I've got a wonderful network of agents throughout the entire country. I can connect you with those agents if you're thinking about exploring some other state. I've had a lot of my clients moving to Boise, Idaho. I've had clients that are moving to Arizona, Texas, Tennessee. Those seem to be the top hits for California. sellers that are selling to move out of state, but maybe you've got your eye on a different area. Let me know. I'm happy to chat with you anytime. Feel free to reach out, and I'll look forward to connecting soon.